Last night, Republicans released their final tax bill, keeping them on track to send a bill to President Donald Trump by Christmas. Now, if passed, this major overhaul will affect the individual taxes we pay every year. And tonight, we are joined by local financial professional Mike Kojonen. He is the owner of Principal Preservation Services, and he joins us now with more on how we could be impacted and what to do to prepare. There is a lot to digest here, so we appreciate you being here. Thank you, Mike.
Yeah, thanks for having me.
And let's start right there. What's included in this tax bill? There is quite a long list.
There's a lot to go over, and nothing has been signed yet, so we're hoping this will be signed on the president's desk here by Christmas. But the first is the tax brackets have changed. We're maintaining 7 tax brackets. We're maintaining those, but a lot of those brackets have changed, especially the top one has gone from 39.6% tax down to 37%. The lower ones have dropped down as well. The corporate tax has dropped significantly from 35% to 21%. Huge tax breaks for businesses.
And I know you have a special feature on your website that it's easy enough to check how you'll be affected as far as that tax bracket is concerned.
Right. Use a calculator to find out what your savings are going to be. You're going to have a savings most likely, but depending what bracket you're in, depending what that savings will be. Yes.
And the changes to the alternative minimum tax preserved here.
Yeah, that's a tax that's trying to avoid loopholes for the wealthy income earners, to avoid those loopholes. They're maintaining that, but they're increasing the limits. If you're a single individual making $500,000 or a married couple earning $1 million, you're going to be under that alternative minimum tax. They repealed it for the business side, so unfortunately, it's went away for that.
For you.
Yeah, exactly.
The child tax credit, there's been a lot of noise surrounding that, but explain what that will mean for people who have children.
Yeah, Senator Marco Rubio down in Florida has really pushed for this, and it's doubled. It went from $1,000 tax credit to $2,000 tax credit, and more families will actually benefit from it because to qualify, it used to be $110,000 of income or lower to qualify. Now it's $500,000 of income or lower will qualify for that tax credit. And
mortgage interest deduction, the cap will be lowered under this plan.
Yeah, it won't affect a lot of people, but right now if you have $1 million mortgage, in the past that was, you could deduct the interest. Now it's being lowered down to $750,000. But if you have a mortgage already in place, you're grandfathered in, so it won't be affected.
And talk about this, the SALT, the acronym, and what that will mean here.
State and local income tax. So they put a cap on that. So this is going to be your property taxes, your car tabs, state and local income tax deduction. They put a max cap on that of $10,000. So I don't think a lot of people here in the Midwest will be as affected, but you get to places like California, New Jersey, New York, who have higher property taxes, they will be affected by that.
So let's just talk bottom line, the overall winners of this tax bill, in your opinion, Mike.
Yeah, well, definitely businesses. Businesses will definitely benefit with that lower tax. Larger states, because they increased that estate tax from $5.6 million to $11 million for passing those assets down to the heirs. I look at it on my side where I'm dealing with retirees. I think they're going to benefit a lot because they're on a fixed income. They don't have the deductions. They don't have the mortgage interest anymore with that higher standard deduction going up. And plus the tax brackets going out, it's going to benefit them, and even considering Roth conversions in that early years of retirement will be a big benefit.
And there are some losers here, though, and you mentioned certain states specifically.
Yeah, again, those high tax states like California and New Jersey, New York, they will definitely be affected because they're capped at $10,000 for that. And also the pass-through of income. In order to get that child tax credit through that Marco Rubio wanted to get through, they had to give up, so you can't pass through as much income through your business untaxed as they could, so they had to give a little bit.
Now this, of course, will not affect our taxes this next year, how we file in the spring. It would be the year after.
Yeah, it's going to be for 2018 taxes. We should, if it gets passed through, we should be seeing some deductions, less taxes being taken out of our paychecks as early as February this coming year.
And the next steps here, because of course this is not a done deal at this point.
Yeah, the GOP believes that there's enough backing to get this passed through this next week, be on the president's desk here by Christmas and signed.
And remind us again your website so we can check the calculator out.
PrincipalPreservationServices.com.
Okay, and we'll link that on WCCO.com as well. Mike Kojonen, thanks for being here as always.
Thank you.
And happy holidays to you.
Same to you.